Thanks for coming. I'm Ken Lindau. I am a CPA. I've been in practice about 45 years. Set up my first firm in '76. Learned a lot since I've been out of school, probably more than that I learned in school. What we're going to talk about today is two topics. The first being analytic metrics, okay? And businesses run on numbers, okay? If you want to, the simplest thing is I'm making a sale, I'm taking money to the bank and depositing them. That's a number. An expanding business offers the potential for numerous growth opportunities. What I want to do when I get in business, I want to grow this thing. I do not just want a job. If I wanted a job, I'd go and work for somebody. I want to create an income for me, and I want to create equity for me. Financial management involves all these activities. Enable a company to obtain capital for growth, allocate the resources effectively, maximizing the income potential of the business activity, and monitor those results through accounting documents. Like it or not, you need financial statements. You need them if you want to go into the bank and get a loan. The banker's going to say, I need a financial statement. You need them when you come to me and say, I want to do a tax return because I want to stay out of prison. I need numbers to put on that tax return. I do not pull those numbers out of the air. So, like it or not, if you're in business, you better get used to having regular financial statements and understanding those numbers, because that's where it's going to benefit you, and you are going to excel, increase that business. Numbers and strategies. Really, you need, this is a game. When I look at a business, I'm playing a real life game versus a board game. I'm playing a game with money and people. And I need to interpret what that business is telling me. Financial statements is a feedback. It's like walking into a doctor's office and saying my shoulder hurts or my side hurts. The numbers are telling me what the business is doing. There is no way that you're going to remember at the end on, say, November 30th, what you did or what that business did on November the 1st. The numbers will. The accounting statement, the accounting system will. It'll tell you exactly who bought something from you, how much they paid, what you paid to other people. That's all within the business. About analytics. Like I said, this is utilizing numbers as a feedback mechanism to the business, but I have to understand what they're telling me. And the other thing is, when you look at a financial statement, that's history. That's what I did. That's looking over my shoulder. What I need is, I need to use those numbers to look down the road. Where am I going? I am driving the car forward, not in reverse. So I need to set some targets of what kind of results I want. And keep driving towards those numbers as much as possible. I need to really measure every step I'm taking to see, am I meeting that target or am I not meeting that target? That is my management. So it's really, I am measuring my results. And it's objective. It's not subjective. So it's basically, the business is telling me, here's your report card. Like I said, I want that top line to grow every year, every month. One of my clients was in the appliance business, and I asked him how did he grow his business? Because they topped out at currently about 150 million. And he said, basically, I looked at what I did last year in November, and I looked at that is the number I have to beat this year in November. And he did that successively over a lot of years. And that's how he grew his business. He's not a financial guy, sales guy. Profit. Basically, if I grow my top line business 100%, I need to grow my bottom line business 100+%. Because if I grow at 90%, that means I'm not efficient. I'm making more money, and I'm not doing as efficiently as I did the last time. So my goal is to grow the top line business X% and grow the bottom line business X+%, because I need efficiency in my operations. Operational control. You're in charge of your business. What it does, you're dictating it to it. So you have to assess the areas where I'm falling behind and where I can improve. This involves business systems and procedures. I don't want to work hard. I try not to. I was a CFO of an Inc. 500 company, and we grew at about 400% a year for 5 years. I was not sweating. I did not have a full-time job there. Basically, I ran out of work about 3 times during a 4-year stint and had to do other things within the company just to keep busy. That's having a system in place to handle your job. My job was CFO. I had someone doing the financial statements that would hand me the financial statements at the end of the month. They were right. So basically, working hard and sweating is not the real objective of being in business. It's to really do it as smoothly and effortlessly as possible. Yes?
What do you think your opinion is right now on the talent pool right now to get the people that you have under you from when you had 4 years ago until now?
I think you really have to search for the right people. How do you find them? The way I find people is when I'm looking for somebody, I let everybody that I value as a producer know that I'm looking for someone, because those producers are not going to refer duds over to you. Okay, but and I find that works well, and you just have to put out what kind of qualities you're looking for. If you hire someone and they don't work out, you've got no one to blame but you, so you have to fix the problem. You have to leave them go. and go to the next one. One of the things that I do is I give psychological testing. Is basically I have someone that I know tell me what is best psychological makeup for this position or that position. I give the test. I view the test as compared with what I'm looking for, and that generally works. At least I've got a leg up on you have the same qualities that I'm looking for that meet this for this job. One of the things you have to assess when you're talking with someone is, are you trainable? Are you smart? Can I work with you? Okay. That's highly important. I mean, you're building a team, just like a sports team. Okay. I have to depend on you doing your end of the work. And when I do, and you have the right people, your job becomes effortlessly. So basically, you've got to assess that this is the right person. And you yourself have to spend enough time to train these people to do what needs to be done in the organization. Resolution of business problems. Basically, a problem is something that's screwed up in the organization. I got to fix that because it's costing me time and money. Both of those I really can't afford. So I want a smooth running organization as much as possible. Okay, now you've all got in your packets this sheet. Okay. And what this sheet entails is a financial statement. Because basically you have the financial statement that these numbers came from. Okay? So your job to create this result in analytics is to input this information. And so basically, at this situation, you're comparing 2001 or 2021 to 2022. Okay? Now, this happens to be for a 12-month period. But say I'm in August. Well, this would be August of this year, and this would be August of this 2022. So I have to compare apples to apples. And so basically, if this is August, I've only got 8 months over here, not 12. All of the green areas are where input is required. The white areas, leave them alone. So basically, that gives you all of the input information that is needed for the next step. It takes me maybe 10, 15 minutes at the most to input this sheet. But the benefits are, in my estimation, tremendous. Okay? Here's this, I have this on the screen, but basically you have the sheet in front of you, okay? This shows you the results. Now, what you as a business person needs to do is look at the red stuff. The red stuff is where you went wrong. In this column, it's a percentage difference on what I did a year ago compared with what I did right now. Did I improve or did I regress? So on the red items, I have to look at Okay, the first one up here is my cost of sales. And I spent more. Can I explain that? Well, my sales increased. So wouldn't it be reasonable that I would spend more to create those sales? Yeah. But I have to really, what I'm really looking for is basically my percentage increase up here versus my percentage increase down here. I have to balance the scales. Because basically I want to use this as an analytic tool for determining if my if I'm making progress or not, okay? And so basically, I want to make sure I'm going in the right area. Now, if you see on this sheet here, I increased sales 165%, but I increased my costs by 152%. So basically what that shows me is I became a little bit more efficient in producing those products. Now, if I'd have went 165% in sales and 200% in cost of sales, I didn't manage my operation well because my costs were going ahead of my sales. So basically, that's what I look for in that area. On the next one, profit from operations. Basically, if I increase my sales 165% over last year, I want to increase my profits a little bit more because basically I want an efficient operation. So basically, on this sheet, it's showing me that I produced 348% of better profits. I'm doing really well. Okay? And so when you go down the sheet, that's what you really look for in each one of these areas. And you ascertain, do I need to take action on the red items only? Leave the green stuff alone. I'm doing a good job in that area. The red items, I have to analyze, do I need to take corrective action? Okay, that compares last year versus this year. Now, if you go over to the column of goals, that's history over here. This is history. Over on that side, I'm going forward. Here's my goal column. That's what I'm saying I want to do this next year. Question is basically, am I making my goal or not? Okay, I go over to my results column over here. Again, okay, I've got a red on the cost of sales. I'm behind my goal. And over here it will produce, when these show up red, it will produce at least 3 items that say, this is a possible thing that you should fix. Okay? If you look down on the accounts receivable line, over onto the extreme right, it's showing you 3 options. Now, this is fine, but basically, maybe I should, like I said, increase possible due. I need to increase sales. The sales increased, so my receivables increased automatically. So I don't, if I choose, I don't need to do anything I don't need to do anything on that. I may decide to revise my credit terms. Maybe some people are taking too long to pay. I need to maybe put some of these receivables out for collection.
Or sell them.
Or sell them. Do something with them. I need to squeeze ascertain what action, if any, do I need to take in my receivables area to improve that area. Because that's an asset there that's not in my bank. Okay, I've already done the work, sold the product or service. I just have to get paid now. Okay? But that's what this does. That's what all of these do. And this type of system can be tailored to a particular type of business. This is just general categorization of a normal business. So if certain areas need to be tailored in the system, it can be done. One of the things with my experience I question is if you're showing up with red here, getting more sophisticated probably is not going to be the best move to make right away. Get the normal stuff. I want to increase sales. I want to increase profits. I want to increase cash in my bank. And I don't want to buy equipment. How can I get my product produced without me going and buying another $100,000 machine? Because it takes cash from my bank. It increases my debt. So you're really, when you're running a business, you're an orchestra conductor. You're conducting marketing, production, finance, a lot of different areas. And you have to make the right decision as to that you're doing the right thing, and that this business is going to tell you if you're producing the right results. On the very bottom here, there's a box. It's called. It shows you. It produces what's called the Z formula, Z score. What that is, it's an indicator of bankruptcy. So you can see that this Z-score falls in the middle of failure or no problems. It was developed by Professor Altman back in the 80s. It was tested in real life on companies in the stock market. And it proved to be about an 85% predictor of bankruptcy. So it's really highly good indicator of, are you in trouble or are you not in trouble? A lot of the times the banks will use this as an evaluation of whether they're going to loan you money or not, along with whatever other indicators they look at. But this is a good indicator of a bankruptcy. I'm in the process of doing another booklet program on how to fix troubled companies. This analytics is really focused in on how do I grow my business. I'm hungry, I want to grow big and fast. How do I do it? I have to manage all of these things to get them in the green as much as possible. Now, if you look at one of the handouts I gave you is on the business. It's called Topsy Tail, $100 million business that was created by Tamara Ebanks down in Texas. She's quite a lady. Now, if you think it's hard to create a $100 million business, but I haven't seen any businesses $100 million or even less being run with 3 employees. If you can create $100 million of business and structure that business for running with 3 employees plus yourself, that is pretty magical. I haven't seen any guys do it. But what that article shows you is if somebody else did it, you can do it. It really, the monkey comes back to rest on your shoulders. Can you be as good as that person? That's one of the best articles I ran across years ago. Metrics like we went through a lot of this analysis or recommendations. Really, these are numbers that we have to dwell on to really come up with solutions, or we pass on it. My cost of goods sold is higher because my sales are higher. Okay? But I am in the ballpark. Is it shrinking compared with my sales increases? Yes. Okay. Basically, we're looking at the ratios, the change ratios on the various components. What I focus in on is the sales, cost of goods sales, but mostly I focus in on the sales plus the profit from operations. Am I doing better this year than I did last year? And am I meeting my goals? Basically, I set these goals. Am I meeting them or falling behind? If I'm falling behind, why? Again, basically, I'm here to produce sales and profits, whatever business you're in. Even if you're in a nonprofit business, your goal is to grow and be of more service to more people. Now, I have to make money. Whatever I'm doing, I have to get money from somewhere. I have to get, that's my production. So I have to produce that to be of service to more people. Some of the things that you really want to do is basically, how am I doing compared with a guy across the street? My industry metrics. Where do I fit? Am I ahead of them? Behind them? Again, we measure prior year actual results and against my goals. Those are all things that we want to really do. We want to make sure that we're improving our operations and that our metrics are tailored to my business. The ones you have in front of you, they're general. Almost to every business. I want to increase revenue, I want to increase bottom line, and I want to increase cash. I want to decrease receivables. And it's basically, I have to determine how I can do that. Here's what I would really look at. I want to look at the projections of value over 1 to 5 years. What is my business going to be worth? You know, I'm looking to retire someday. So basically, what's the value of what I've been creating? The projections when you project a value for a business, it's generally projected off bottom line profits, not the sales. Because basically, what I'm taking home is on the bottom line, not the top line. So I'm looking at the bottom line, increasing that. I've got one client, we're at a 25% bottom line profit. We're looking at selling that to another company in LA. Their valuation methodology is very unscientific, and they don't quite agree with our valuation. So it's generally what you do on the bottom line is basically it runs anywhere from 3 to 5 times. So if I created a $100,000 profit this year, you multiply it times 3 or 5, that's what your business is worth, plus the hard assets. Now, if you've got a really fast-growing business, it might go up to 8. If you take that business and take it public, it might go up to 17. Okay? Basically, I said, once the financial statement numbers are entered in this, it goes on autopilot, producing this kind of sheet and giving you the possible things that you can really look at. If you look at on the edge, there's a little box on next to each one of these solutions. If you check that box, it will carry that solution over to the next portion that we're going to talk about, which is turbo growth management. And that gets your management team involved in your assignment of who does what, who's responsible for fixing this area. And I, as a CPA, I'd like to shortcut this. I'd like to not have to do numbers. I haven't figured out how to not do numbers. And so basically, the benefits of doing these metrics far outweigh the time I have to put into them, because they tell me things about my business that I really should consider, but may not consider as just generally as an operating person. Okay, this is what somewhat our background is. Basically, we grew. I did turnarounds. They are harder. It's like turning around an elephant. Okay, it's very hard. You're dealing with existing culture, existing way things are done. We've started both large and small companies. It's a lot of fun, rewarding. We've talked with a lot of businesses over the years. The real trick there is, again, the individual, whether you want to listen or you don't want to listen. There's nothing I'm going to say that if you don't want to listen, you're not. We've had a number of people that just lose $1 million businesses because they will not listen. So there's nothing you can really do. When you start getting into double or triple digit revenue and profit growth, it starts being fun. And when you start getting into that area, it's not hard work. It starts, everybody is getting along in the team, because if they're not, you're not getting up there. If everyone is fighting in that organization, you are not getting into double or triple digit growth. I can guarantee you. Your operating costs start being under control. You've got systems and procedures in place to do your work. You have a top focused management team. You've developed that in that process. So it starts being a great deal of satisfaction when you get to that kind of level. If any of you are interested, be glad to talk to you. One of the benefits out of the next session is this feeds into this area, Turbo Growth Management Program. This is a program that I developed with the Inc. 500 company, because I didn't know what everyone else was doing in the business. I was the outsider. And so I developed a system to give me the feedback to what was going on in the system or the company, and it produced some other benefit, a lot of benefits that I never expected. So I know it really works. And in certain areas, I work where I guarantee results. Basically, if I don't get results, I don't get paid. So if any of you need any information, just give me a call. Like I said in the first, data equals information equals results. The goal is to turn this data into information that I can use to create a result. That's what we get paid for, results, not process. We don't get paid for how hard I'm working, how many hours, how much I'm sweating. It doesn't matter. How much I know, it doesn't really matter. This is basically what you get paid for is what I take to the bank. It's not a matter of greed, it's your report card. If you look at money as your report card for what I did, how good I was in business, that's it. My deposit slip going to the bank.